Let's start. Capital account, it is showing a credit balance. In the trial balance, capital account is showing a credit balance. Where do you show capital account? It is a liability for the business. It is the amount contributed by the owner. So whenever the owner wants, he can ask the money back. So it is like a loan for the business. It is a liability for the business. We show it on the balance sheet, liability side. I think yesterday I gave you the entire format.
Yes, sir.
Right, capital, inner column, 10,000 rupees. We are not closing the capital account. Capital account will continue in the books of accounts. All those accounts which are going to continue in the books of accounts even in the next year, all those account balances are shown in the sheet called as the balance sheet. Okay, and the balance will be carried forward in the books of accounts of the next year. Inventory account, debit balance 2000. What is that inventory? It is nothing but opening stock. It is what? Opening stock. Where do you show opening stock? Opening stock should be shown on the trading account, debit side. Listen to me. Current year the goods would have been sold. During the year, whatever opening stock we have would have been sold. So when you show income on the credit side of a trading account, the cost price of the goods sold should be shown on the debit side to match expense with revenue. During the current year, goods would have been sold, income would have been recognized on the credit side of the trading account, and you have to show the cost price of the goods sold on the debit side because you have to match expense with the revenue. So right here, to opening stock. How much amount? 2000 rupees. Now listen to me carefully. In our books of accounts, before we wrote this, in our books of accounts, opening stock, inventory account was showing a balance of 2000 rupees on the debit side. Now we have written trading account debit side to opening stock. Unknowingly we have passed an entry here. What is the entry we have passed? Trading account debtor to opening stock. We have passed an entry unknowingly, trading account debtor to opening stock. If trading account is debited, opening stock account will be credited. That means here we will be writing by trading account 2000 rupees. Because of writing like this, the opening stock account is now closed. It has got closed by transferring to the trading and profit and loss account. Is it clear?
Yes.
Next. This is happening in the background. Next, cash in hand. Now, what is cash in hand? Is it an expense? Is it an income? It is an asset. The most liquid asset. Hence, it should be shown in the. It should be shown in the bottom of the balance sheet on the asset side. Cash in hand, 1,440. Yesterday I gave you the format. No.
Sir, what if we write at the top? It will be wrong, sir.
It will not be wrong, but we follow a particular order. Descending order of liquidity. We want to show the most liquid assets at the bottom which are available for use now. That means they can be converted into cash very easily. And the assets which take some time to be converted into cash will be shown at the top. Machinery account 7,360. Now what is machinery account? Can you easily convert it into cash? No, it's an illiquid asset. It will take some time. If you want to sell machinery, you have to wait for a buyer, then he would come, he would see the machinery, bargain, he may not like it, he may go away, then some other person will come. So it will take some time for you to sell the machinery and convert it into cash. It is not a liquid asset. You normally show it at the top. I think yesterday I gave you an order. First we show land, then we show building, then we show machinery. See in the problem, do you have land account and building account?
No.
No, we don't have land and building account. So we can show machinery account at the top now. Machinery account. How much? 7,360. Now, will we close machinery account in our books of accounts? Machinery account should be there in our books of accounts till the time machinery is there in our business. So till the day machinery is there, machinery account should also be there. The day machinery is disposed of, the account should also be closed. So the account balance is going to continue in our books even in the next year. Hence, those account balances which have to continue in our books in the next year are shown in the sheet called as the balance sheet. But those balances have to be classified. Asset balance or liability balance. Machinery is an asset, hence shown on the asset side. Next, purchases account 18,200. Where will you show purchases? Trading account, debit side. Do you have purchase returns in the problem C? You don't have any purchase returns. If you have any purchase returns, you show purchase in the inner column. Less purchase returns, you show net purchase in the outer column. Two purchases, how much?
18,200.
18,200. Now, if you want to see what is happening in the background, purchases account. Before we prepare the trading account, two cash, two creditors. You can have cash purchases, credit purchases, two cash and two creditors. Total amount was 18,200. Now because yesterday I gave you the format, I told you purchase should be debited in the trading account. So we wrote two purchases. You all said yes, we have debited in the trading account. You have debited because it is a direct expense. Yes, you have debited it. Now unknowingly here you have passed an entry. What is the entry of passed? Trading account data, two purchases. So in trading, in purchase account we are going to write by trading account. Now when you write this, what happens to the purchase account? It automatically gets closed. That means you have closed purchase account and you have transferred the balance into account called as the trading account. Okay, that is why this account is called as a nominal account. At the end of the year, the account is getting closed. Okay. What about capital, machinery, cash in hand? Did you pass any entry and close those accounts?
No.
The accounts are there in the books. They will continue in the books. Those account balances are shown in a sheet called as the balances sheet. It's a sheet where we are going to show all the balances in the accounts which have to be continued in our books in the next accounting period. Okay. Next, wages account 10,000. Where do we show wages? Trading account, two wages. It is a direct expense. Trading account debit side we show direct expenses. Credit side we show direct income. P&L account credit side we show indirect income. P&L account debit side we show indirect expenses. Expenses relating to the period, indirect expense. Incomes relating to the period, indirect income. If an expenditure can be measured per unit sold or per unit produced, direct expense debited here. But if an expenditure cannot be measured per unit sold or per unit produced, if it can be measured per month, per annum, it becomes an indirect expense debited to the P&L account. Income from our main business activity, sale of goods, provision of services, direct income credited to the trading account. Income relating to a period, interest income, commission income, rental income, income relating to the accounting period, credited to the profit and loss account. Okay, let's continue. Now again here, before you pass this entry, wages account in your books of account was showing cash. You would have paid wages in cash, no?
Yes, sir.
Wages account was showing debit balance 10,000. Now what you have done? I told you wages have to be debited to the trading account, so we wrote two wages there without any asking any questions. But unknowingly, actually, you have passed an entry. What is the entry you have passed? Trading account data to wages. Trading account is debited. What will be the impact on wages account? By trading account. That means the wages account has been closed at the end of the year. That means the wages account has jumped into the trading account and died. Okay, so the wages has taken a jump into the trading account and the account is now closed. Trading account and P&L account are graveyards where all the nominal accounts are going to be buried. Trading and P&L account are graveyards where all nominal accounts have to be buried. All the alive accounts, the real accounts and the personal accounts, the assets and liabilities, they will be kept alive by putting them in a sheet called as the balance sheet. Okay. All remaining accounts will be killed by transferring them to trading and P&L account. Salaries account 10,000 rupees. Where do you show salaries? P&L account. Profit and loss account. Two salaries. Again we are doing some killing now. salaries is closed by transferring them to the profit and loss account. Where you go? Salaries account has been now closed by transferring it to the profit and loss account. Okay. Before doing this, salary was showing a debit balance. Unknowingly, I pass an entry P&L account at R2 salaries. Salary account will be credited. Automatically, salary account will be closed. Now, salary has gone to its graveyard called as the profit and loss account. Next, that is why it is called as a nominal account because it is going to be closed at the end of the year. Discount allowed 500. Where do you show discount allowed? It's an indirect expense to be debited to the profit and loss account. To discount allowed. How much? 500. Now, before you transferred it to the P&L account, discount allowed account was showing a debit balance of 500. Now, you have actually passed an entry P&L account at R2 discount allowed. Discount allowed account will be credited and the discount allowed account will be closed. Are you able to follow, Manoj? Next, discount received. Where should we write, Manoj? Discount received. P&L, I know. Which side? Indirect income, which should be shown on the credit side of the profit and loss account. By discount received. How much? 300. Actually, see the background. Discount received by creditors 300. Discount account was showing a credit balance of 300. I have to close the account. It's a nominal account. I have to close it. I have to send it to the graveyard. So I'll write here to profit and loss account 300. To close the account, I have to give a debit. Right? Understand? This account is showing a credit balance. This balance cannot continue in the books of next year. It has to be closed in the current year itself. I have to close this account. If I have to close the account, what should I do? I have to give a debit. Then this account gets closed. Where will I transfer the amount? Profit and loss account. If I write to P&L account here, what should I write in P&L account? By discount received. So actually you have closed the account and you have transferred the balance to the profit and loss account. What is the entry of past year? Discount received account return to P&L account. What is the entry of past? Discount received account. Not allowed. Discount received account return to P&L account. Okay. So it has come to the graveyard now. Next.
So this is happening in the ledger or are we just
ledger.
for
Ledger. No. It will happen in the ledger. Trial balance is only a sheet which will help you to know the arithmetical accuracy whether the debits and credits are equal or not. You will actually use the ledgers to prepare the final accounts. In ledgers, you have to pass the necessary postings to close the account and then transfer it to the P&L account and the trading account. Okay. Now, the examiner cannot give you the ledger, no. So that is why he is giving the summary of the ledgers in the form of trial balance. Next, sundry office expenses 6,000. Where do you show sundry office expenses? Profit and loss account. Sundry office expenses. How much? Next, sales account. It is direct income. Sales account has to be closed at the end of the year. So where will you transfer sales account? Sales account has to be credited to the trading account credit side by sales account.
2000.
Sales account is also closed at the end of the year by transferring it to the profit and loss account. Not profit and loss account, trading account. What is the entry of past to close sales account? Sales account, debtor to trading account. Trading account has to be credited, no. So trading account credit. Debit to which account? Sales account. So what is the entry of past? Sales account, debtor to trading account. Next, sums owing by customers. Trade receivables 8,500. Sums owing by customers. Trade receivables 8,500. You have to collect money from our customers. Can you close those accounts? Throw them in the graveyard. These account balances till the time we collect the money from our customers, account balance cannot be closed. The account cannot be closed. It has to continue. If you close, if you close the account, the customer will very happy. Why? Because you have not asked him money. So till the time you get the money, you cannot close the account. It has to be continued in our books, and all those balances which we want to continue should be shown in the sheet called as the balances sheet. So it will show here debtors. How much? Trade debtors, trade receivables, everything same. How much?
8,500.
8,500.
So debtors come under current assets, right?
Yes. Why is it called as a current asset? Fixed asset, I told you. Normally they remain in the business for a long period of time. Account balance is not going to change except for depreciation. And if you show depreciation in provision for depreciation account, the asset account balance will always remain the same. Okay. Why are current assets? Why are debtors, bills receivable, stock, cash, bank called as current assets?
Temporary.
Yeah. No, and then we can call them as fluctuating assets. See, I'll give you one simple interpretation. Normally these are for current consumption, all those current assets. That is why we call them as current assets. Or I'll give you another explanation. Cash, why is it called as a current asset? Okay, we'll take debtors. When you sell goods, debtors balance increases. After some time you collect money, debtor balance reduces. Again you sell goods, debtor balance increases. And then when you collect money, the debtor balance reduces. As you sell goods, debtor balance increases. So if you draw a graph with the debtor balance in the graph, you will find that balance has kept on increasing and decreasing throughout the year. That is why it is called as a current asset. Stock, similarly, when you purchase, stock increases. When you sell away stock, it reduces. As soon as you purchase, it increases. As soon as you sell, it decreases. So balance keeps on increasing and decreasing. It is called as a current asset. And they are going to be converted into cash within a period of 1 year or within your normal business cycle. Hence they are called as current assets. Held for current realization. Trade payable, sums owing to suppliers. How much? 3,700. Can you close these accounts?
No.
If you close the account without paying, your creditor will break your leg. So you cannot close the account without paying the amount. Hence you have to show it in the balance sheet, liability side. Sundry creditors, how much? 3,700. Now, value of closing inventory on 31st December 2011 was 2,700 rupees. Value of closing inventory on 31st December 2011 was 2,700 rupees. How do you deal with closing stock now? Listen to me very carefully. Value of closing stock on 31st December 2011 was 2,700 rupees. That means at the end of the year, in our godown, in our shop, we have stock of the value how much? 2,700 rupees. My question is, where did this stock come from? Did you put any magic spell and the stock has appeared?
Purchases.
The stock has come out of our purchases during the current year. So where has the stock come from? During the year we have purchased some goods. At the end of the year you find that out of the stock purchased, a portion of the stock has not been sold. It is remaining unsold. Okay. Now my question is, here you are showing sales on the credit side. Here you are showing purchases, wages and opening stock on the debit side. My question is, have you sold all these goods during the year? Have you sold all these goods during the year? Or out of these goods, some goods are unsold? Just now we have come to know. Closing stock is of the value how much? 2,700. So we have come to know that out of this stock, out of this expense, some stock has remained unsold. So this includes stock worth 2,700 which has been remaining, which is unsold. Now, what should you do? See, simple logic is, on the debit side, you should show only the cost price of goods which have been sold. matching concept. What should be shown on the trading account debit side? Simple answer is only the cost price of the goods which have been sold that have to be debited. But I know that out of this stock worth 2700 is not yet sold. So cost price of the goods sold is lower than this amount by 2700 rupees. I know that out of this stock worth 2700 is unsold. So cost price of the good which has not been sold cannot be debited here. It has to be removed. What can be debited here? Only and only cost price of goods sold. Listen to me. Suppose if you have sold 100 units, you can show only cost price of 100 units on the debit side. You cannot show cost price of 110 units. Matching. Now we know that out of this stock worth 2700 was unsold. Hence we have to remove the cost of the unsold stock from the debit side. How will you remove? I'll do like this. And write the remaining amount. Can I write like that?
No.
Cannot do like that. Let it remain like this. I want to reduce this amount. So I'll write here by closing stock.
2700.
To remove 2700 from the debit side, I have given a credit. By closing stock 2700 rupees. Did you understand?
Yes, sir.
Now, unknowingly I have passed an entry. What is entry I have passed? Closing stock account data to trading account. Unknowingly I have passed an entry. Trading account is credited. Closing stock account should be debited. So you have passed an entry. Closing stock account data to trading account. Because of this entry, now a new account will be opened called as the closing stock account. The debit side you will write to trading account. How much? 2700. Now the nature of closing stock is little different. All other nominal accounts come and they die in the graveyard. They come and bury themselves in the graveyard, but closing stock is ulta account where it takes birth in the trading account. Okay. So closing stock account is debited. It is showing a debit balance. It is an asset because it can be sold in the next year and generate some revenue for the business in the next year. This account cannot be closed. It has to be continued in the books of accounts. It will be closed by transferring into the trading account of next year, like opening stock which we have done this year. Is it clear?
Yes.
This closing stock will become opening stock for next year and will be closed in the next year by transferring into the trading account. Hence, closing stock has to be now shown as an asset. So I'll write here stock.
Sir, stock is a part of purchases only, right, sir?
Yes.
So-
Unsold goods.
Yes, sir. So why can't we show it in the purchases only, sir? The ledger account, sir?
No. Stock we found out at the end of the year by physical counting. At the end of the year, we went to the godown and we found that some stock was unsold.
Sold.
By the time you have already debited purchases to the trading account. So now you want to adjust it. You have given excess debit, you want to adjust it. That is why to remove the excess debit, we have given a credit. Now, suppose, an answer to your question. Suppose you know the stock value before you prepare your final accounts. Before you have started preparing your final account, you already know the stock value. Then you can pass an entry before you prepare your trial balance. You pass an entry, closing stock account data to purchases. What is the entry you pass?
Closing account data.
Instead of writing closing stock account data to trading account, you pass an entry, closing stock account data to purchases. If you pass this entry before you prepare your trial balance, then the purchases which will appear in your trial balance are called as adjusted purchases. The purchase is already adjusted for closing stock. In such a case, you are going to show here purchases after closing stock. After removing closing stock figure. In such a case, closing stock will appear only in the balance sheet assets. But if you have passed the entry, closing stock will also appear within the trial balance. It will not appear outside the trial balance. Is it clear?
Yes, sir.
Here what we have done, after preparation of trial balance, while preparing the final account, we have come to know that there was some stock. So we pass an entry then. By the time already the trial balance has been prepared, the ledgers have been balanced. We pass an entry, closing stock account to trading account. Closing stock, a new account got opened, hence we showed it in the balance sheet asset side. But suppose if you had passed the closing stock entry even before preparing the trial balance, you had passed the entry closing stock account debtor to purchases. In such a case, purchase that will appear in the trial balance will be after subtracting closing stock, and closing stock will also appear in the trial balance showing a debit balance. In such a case, purchase will be shown in the trading account and no more adjustment for closing stock is required because entry is already passed. Closing stock will be shown on the balance sheet asset side. That's it. Is it clear?
Yes,
We'll discuss about it again and again later. Next, so we have done all the entries now. Now we have to calculate gross profit. 52,700 total of the credit side. How much is the profit? 2 gross profit carried down to P&L account. We'll write here by gross profit brought down from trading account. 22,500. So gross profit is found, is brought down. Okay. $22,500 plus 300. How much is it? 22,800. 22,800 minus 16,500. How much is it? 6,300. We call it as the net profit. To net profit transferred to capital account. See, here we actually passed 2 entries. For transferring gross profit, we have passed an entry, trading account debtor to P&L account. What is it we have passed? In trading account we are writing to P&L account 22,500. In P&L account we will be writing by trading account 22,500. Okay. We have passed an entry. What is the entry we have passed? Trading account debtor to P&L. When you pass this entry, trading account gets closed and the profit comes to the profit and loss account. Okay. Net profit transferred to capital account. Here we pass an entry actually. P&L account debtor to capital account. What is the entry we are passing? If you pass this entry, P&L account will be debited, it will be closed. Capital account will be credited. Capital account is already showing a credit balance. If you again give a credit to capital account, balance is going to increase. So right here add net profit 6,300. Outer column 16,300. How much is it? Let us do one more problem. Come to page number 6.35. Problem number 12. Come to page number 6.35. Problem number 12. you the following trial balance and some other information. Trial balance as on 31st March 2011 is given to you. So let us start first of all preparing the trading account and the profit and loss account. This balance sheet of Mr. Mohan as on what date?
21st March
2011. Don't talk. Let me do it. I'll give you sufficient time. Let us start. Capital account. You are prepared? Please be quick. Ready, everyone? Capital account showing a credit balance 6,50,000. Capital account is showing a credit balance. It's an account which will not be closed. It has to continue in our books in the next year also. Hence, it is shown in the balance sheet. Capital inner column. How much? 6,50,000. Capital balance sheet liability side inner column 6,50,000. Sales account. Credit side 9,70,000. Sales account showing a credit balance 9,70,000. How do you deal with it? Sales is a nominal account. It has to be closed by transferring it to the trading account. It is a direct income. Hence we show it on the credit side of the trading account. We write here by sales. How much?
9,70,000.
9 lakh. Right? Do you have any sales returns? There. So we'll write in the inner column. 9,70,000. We show it in the inner column because there is some returns. Okay, let us go through the problem first. Purchases 4,30,000 debit balance. Opening inventory 1,10,000. Freight inward 40,000. Salaries, other administration expenses, furniture, trade receivables and payables, returns, discounts, debit and credit, bad debts, investment in government securities, cash in hand, cash in bank. Other information, closing inventory was 1,80,000, depreciation at the rate of 10% per annum has to be provided. So you have read the problem. Let's continue. Purchases 4,30,000. I feel there is a printing mistake, boss. Purchase should appear on the credit side, no? It should not appear on the debit side. When you purchase goods, cash goes out, issue a check, bank is credited. When you purchase goods on credit, creditor is credited. Purchase account should show a credit balance. Please change it. Change in your books. Change it in your books. Purchases. Yes or no? Why no? Purchases will always show debit balance. Why debit balance? Nominal account, expense and loss debit, or goods, real account coming in debit. So even if somebody pulls your leg, pulls your hand and asks you to write it on the credit side, you should say, boss, I am not going to do any sin. I'll always write on the debit side. So write on the credit side. Very good. So purchases, you have to close the account by transferring it to the debit side of the trading account, but please put it in the inner column. Leave some space for opening stock. Right here, 2 purchases. How much? Here we have passed an entry, trading account, data, 2 purchases, to close purchase account. Next. Opening inventory means what? Opening stock. This was sold during the year. Hence, the asset is no more there. It has to be closed by crediting the opening stock, debiting the trading account. So right here, 2 opening stock. How much? 1,10,000 outer column because there is no adjustment to it. Next. Freight inward, how much is it? 40,000. Freight inward is a direct expense. We debit it to the trading account and close freight inward account. So leave some space here for purchase returns. Then you write freight inward. How much? 40,000 rupees. Salaries, 2,10,000 rupees. The account has to be closed by transferring it to the profit and loss account. So salaries will be closed by transferring it to profit and loss account. 2 salaries, how much? Next, after salaries, other administration expenses, means office expenses, 1,50,000. Where do we show? Profit and loss account. Indirect expense. Don't feel very happy that we are doing very easy problem. We'll take up all difficult concepts also. To administration expenses, 1,50,000. Next, furniture, 3,50,000. It is an asset. It has to be shown on the balance sheet, asset side. But check whether you have any land, building, machinery, etc. No. So furniture is the only major asset we have. So you show it on the balance sheet, asset side, inner column, furniture. How much? 3,50,000. I'll put it in the inner column because in adjustments, you have an adjustment. You have to depreciate furniture by 10% per annum, no?
Yes, sir. Sir, when do we show furniture as purchases?
If you are in the business of buying and selling furniture. If furniture is goods for you, then you call it as purchases. Trade receivables, trade payables, 2,10,000, 1,90,000. Now I'll tell. Trade receivables is 1,90,000 and trade payables is 2,10,000. What is trade receivables and trade payables? Debtors and creditors. So according to me, debtors balance is 1,90,000. See your book. Debtor balance is 1,90,000 and creditor balance is 2,10,000. No. Why no? Tell me a logic for that. Debtors, personal account, receiver, debit, hence they will always show debit balance. So 2,10,000 which is given in the debit column is debtors and credit side which is given is creditors, bills payable. Okay. Debtors, personal account, receiver, debit, hence debit balance. So the amount which is given in the debit column is debtors and trade payables, bills payable, creditors. The amount given in the credit side is creditors. So where do you show debtors? Balance sheet, asset side. Keep some space here. Debtors, how much? 2,10,000. Stop talking. Creditors, balance sheet, liability side, how much? 1,90,000. returns, purchase returns and sales returns. Returns can be of return inward, return outward. Return inward is sales returns, return outward is purchase return. But you are given returns, 20,000 debit balance, 12,000 credit balance. So what is that debit balance, what is that credit balance? You have to use logic. Sales returns, goods are coming back. Real account coming in, debit. Or sales is income, sales returns is an expense. Nominal account, expense loss, debit. Hence the debit amount is nothing but sales returns. The credit item is opposite, purchase returns. Okay. So the debit column, whatever amount is given is relating to sales returns. What do you do with sales returns? You subtract it from sales. Sales returns, how much is it? 20,000. Now the net amount can be shown in the outer column, 9,50,000. Purchase returns, 12,000, credit balance. Where do you show purchases? Trading account. Debit side, purchase returns, how much? Now you show net amount in the outer column, 4,18,000. Now listen to me. Here we actually pass an entry. Purchase returns account is showing a credit balance. The account has to be closed. We pass an entry. Purchase returns account are to purchases. Because of this entry, purchase returns account gets closed, and that is why we are subtracting it from purchases. To close purchase returns, we pass an entry. What is the entry we pass? Purchase returns account are to purchases. Two purchases. Purchase account has to be credited. Purchase account normally shows a debit balance. If purchase account has to be credited, that means balance has to be reduced. That is why we are saying less there. And when you debit purchase returns account comes to a close, because purchase returns account is showing a credit balance. When you debit purchase returns account, the account will get closed. Similarly, for closing sales returns, we pass an entry. Sales returns shows a debit balance. Yes, it is showing a debit balance also. How will you close it? Credit sales returns, debit sales. Sales returns account is showing a debit balance. You have to close it. How will you close it? By writing the amount on the credit side. So we credit sales returns, we debit sales, we pass an entry, sales account data to sales returns. What is the entry we pass? Sales account data to sales returns. By passing this entry, sales returns account will get closed and sales account will be debited. But sales account normally shows a credit balance. If you debit sales account, balance will reduce. Hence we are showing it as minus from sales. Is it clear?
Yes, sir.
Next. Even if you don't remember those entries, no problem. Just write minus from purchases, minus from sales. Discounts. Again debit side, credit side. Now I'll select. You have both debit and credit. Discounts. Discount allowed, discount received you are not specified separately. So I'll pick up. Discount allowed is 9,000 and discount received is 19,000.
Opposite.
Opposite? I'm
Yes,
told.
sir.
I think I keep telling you all wrong answers. So discount allowed should be what balance? Manoj. Discount allowed should show what balance? Debit balance. Why? Nominal account, expenses and losses, debit. So the debit amount is nothing but discount allowed. The credit column is nothing but discount received. Nominal account, incomes and gains, credit. So where should you show discount allowed? D&I account, debit side. How much discount allowed? 19,000. Discount received is shown on the credit side. How much?
9,000.
Bad debts. 5,000 rupees debit balance in the trial balance. Now can you tell me, how did bad debt come to the trial balance? What was its journey? Can you describe the journey of bad debts account? When you sell goods on credit to customers, we pass an entry, debtor account, debtor to sales account. When you sell goods on credit, what is entry you pass? Debtor's account, debtor to sales account. Debtor account is debited. Okay. If the debtor becomes bad, he becomes insolvent, he is unable to pay. What is entry you pass then? Bad debts account, debtor to debtor's account. What is entry you pass? Bad debts account, debtor. When you pass this entry, debtor balance reduces and bad debts account is debited. Yes, bad debts account is debited. So when you balance the account, bad debts account will show a debit balance. That is why it is appearing on the debit side of the trial balance. Okay, that means goods were sold on credit during the year and some of the debtors have become bad. You have already written off bad debts. You have passed the entry bad debts account, debtor to debtor's account. Because of this entry, debtor balance has already reduced and the loss is debited to an account called as the bad debts account. My question is, this loss account, should it continue in our books even in the next year?
No.
It's a loss. It has to be closed at the end of the year and you have to transfer it to the profit and loss account. So where do you show bad debts? Profit and loss account. 2 bad debts. How much? 5,000. My question is, should you subtract it again from debtors, receivables?
No.
Yes?
No.
Should I subtract again from debtors? No. Entry is already passed. Debtors have already been reduced. Okay, so you need not again subtract them. These are debtors after subtracting bad debts. Are you able to understand?
Yes, sir.
Investment in government securities, 1 lakh. During the year we had some surplus cash in the business. So we have invested the money in some government bond which give us some interest. It's an asset. You show it in the balance sheet, asset side. Leave some space below furniture. And leave some space for stock also. Government securities. How much?
1 lakh.
It is an asset. Till the time you have that investment, the account should also be there. The day you sell away the investment and you collect cash, that day you can close the investment account. Okay? Next, cash in hand and cash at bank, 1,87,000. So where do you show it? Balance sheet, asset. Cash in hand and at bank. How much? What is the amount? 1 lakh? 1,87,000. Now you are given some additional information. The accountant is coming for your help. Closing inventory was 1,80,000. At the end of the year, while finalizing the accounts, we come to know that out of the goods purchased during the year, some stock is unsold. What is the value of unsold stock? 1,80,000. Now try to understand. Out of these goods costing 1,80,000 were not sold. What should be debited to trading account? I think I just now told you. Only the cost price of goods which have been sold should be debited. This is sale price of goods sold. Here you should show cost price of goods sold. You cannot show cost price of goods unsold. But this includes cost price of goods sold. Goods which are unsold. It includes both cost price of goods sold and cost price of goods unsold. So I have to remove the cost price of goods unsold. So how will I remove it? I cannot just strike it off and write the remaining amount. I write it on the credit side. What do I write here? Buy closing stock. 1,80,000. What is the entry I passed? Closing stock account debtor to trading account. When I pass this entry, trading account is credited, closing stock account will be debited. It will show a debit balance, which is shown in the balance sheet asset side. Stock. Stock. 1,80,000. So closing stock took birth in the trading account. Closing stock account debtor to trading account is entry we passed. Closing stock account will show a debit balance, hence it is shown on the balance sheet asset side because it's going to get some money in the future for us. Next, depreciate furniture at the rate of 10% per annum. Now the accountant has come to you and is asking your help. I have forgotten, he is telling you that I have forgotten to charge depreciation. Now he wants your help. All the accounts have been prepared. Now he tells you that I have forgotten entry. You have to help him out. How will you help him out? Depreciate furniture by 10% per annum. The accountant is coming to you and is saying, sir, I have prepared all the final accounts. Now I have come to know that I have forgotten to charge depreciation. I have forgotten to record depreciation entry. He wants your help. How will you help him? Now tell me, what is the entry you should have passed first of all for depreciation? Depreciation account and furniture account. Okay, I'll write the entry here, somewhere below the balance sheet. Depreciation account debtor to furniture account. How much you have to depreciate? 10%. What is the value of furniture? 3,50,000. 10% is 35,000. This entry, the accountant has forgotten to pass. Now you have to help him. Now, proper way is tear the trading account, P&L account, balance sheet, throw it into the dustbin. Tear the trial balance also, throw it into the dustbin. Pass this entry in your journal proper. Give posting of this entry in the depreciation account and the furniture account. Again balance all your ledgers. Prepare a fresh trial balance. With that again prepare a fresh trading account, P&L account and balance sheet. He'll say, accountant will say, I have come to you for help, not for creating further problems for me. So what should you do now?
To depreciation.
Wait. If you pass this entry, now what will happen? A new account called as the depreciation account will be opened. Automatically will get opened when you pass this entry. And depreciation account will start showing debit balance. Can you keep that account going? It is a nominal account. It has to be closed by transferring it to the profit and loss account. So you have to show depreciation in the profit and loss account. You write to depreciation. So because of this entry, listen to me, because of this entry in the background, now a new account called as the depreciation account will be opened. To furniture, 35,000. Can you carry this account to the next year? No, it has to be closed. How will you close it? We'll write here by P&L account 35,000. To close the account I give a credit. If I give a credit here, P&L account should be debited. So I debited the profit and loss account. You need not show all these accounts.
Sir,
So in the background we assume that depreciation account was opened and then immediately closed. Okay. Then what is the next impact? Furniture account has to be credited. Now, if I credit furniture account, what will be the impact on the balance? Can you tell me?
reduce.
Furniture account is showing a debit balance. See the trial balance, it is showing a debit balance. It's an asset. It can either show debit balance or zero balance. It can never show a credit balance. Furniture account is showing a debit balance. This entry is asking you to give a credit. That means the balance has to be reduced. Go to the balance sheet and write here less depreciation. 35,000. Outer column 3,15,000. Why am I subtracting? Because this entry is asking us to credit furniture account. Crediting furniture account means reducing the balance. Hence I am going to the balance sheet and reducing it directly. Because furniture account is hiding in the balance sheet. No. It was hiding in the balance sheet, so I have gone to its hiding place and reduce the balance. Okay. So whatever impact that entry will have has been given directly in the final account and the balance sheet. Okay. Now let us find the gross profit. Total, first of all, credit side.
11,30,000.
11,30,000 is the total. Debit side you write 2. Gross profit carried down. How much? 5,60,000. By gross profit brought down 5,62,000. Find net profit now. What did I get is 5,60,000? Total of 11,30,000 minus these three items. I get a gross profit. This total minus these three items, the excess is the gross profit. Total of the credit side in the P&L account, tell me how much is 5,71,000. Out of 571, subtract these items and tell me what is the balance? 1,87,000. 2 net profit. 1,52,000. 2 net profit transferred to capital account. Capital account will say add net profit 1,52,000. Total 8,02,000. 9 lakh. Don't feel, sir, the adjustments are very simple when compared to our intermediate and etc. I teach you all the adjustments. It's only a beginning, no? We should continue tomorrow's class.